Appreciate everyone that taking time out of their morning this morning to jump on our virtual field huddle. We're definitely sometimes this is nice to do, but same time as sitting across the kitchen table or something like that is nice too. But based on the times we're in, we're getting used to this new way of presenting information to you customers and to make better decisions throughout the winter for this upcoming growing season. So appreciate everybody's time, and now the kind of planning from here on in seems to get more serious. And I guess without crop production show coming up here in the beginning of January, we will miss that event to get together and kickstart our crop production plans. So but we're going to have probably a few more of these to help bring some of that information to you guys as well in January. Stay posted. We are going to have kind of a little bit of a void from crop production week of adding each day for I think 4 days in a row of different information about different crops and stuff like that. So more information to come. So stay posted or talk to your rep, and they'll provide you more information if you're interested in that. So without further ado, I'd like to introduce our first person that's going to present is Scott Simonson. He's been with Cargill for I'm not even sure exactly, but probably over 10 years for sure. And he's been kind of the sales rep, account rep in the Clavette area for when he moved into back home to Canada, I think is where he did. So he's been in the agriculture industry for a number of years. Very passionate about on the fertility side of agronomics and stuff like that. So he's a lot of people know Scott. He's been around at Clavette for quite a few years. Very knowledgeable person when it comes to the fertility program and all agronomics, and very passionate about that as well. So I'd like to introduce Scott. He's going to talk a little bit about the fertilizer markets and a little bit about the fertilizer markets and what they're doing and a little bit like that. So if you have any questions, type it in the chat, and at the end, or if it's kind of something, I will interrupt Scott, and we will definitely ask that question and get the questions answered. If you can't type into the chat, we will, at the end of Scott's presentation, we will also be able to get you unmuted and ask any questions you may have. So without further ado, I'd like to introduce Scott Simonson.
All right, great. Thanks, Brad. I'm flattered with the great introduction. Don't usually get something like that. So looks like a really nice turnout this morning. So I want to thank you all for coming. So I'm just going to take a little bit of a second here to upload my presentation, and then we'll get right into it so that it doesn't, so I don't go over time too far. So just bear with me for a second here. So Brad, did that show up?
Yeah, I can see your screen. Yeah, no, it looks good.
Okay, so welcome everybody to this field huddle. So we're going to start off here today with the fertilizer market update, and I'll do that, and hopefully it doesn't take too much longer than say about 15 minutes. And then after that, we'll bring on Amy. She's going to do a little discussion. She's from the Davidson location. She'll do a discussion about crop rotations, and then we'll finish up, I believe, with Eric. And Eric is a grain rep out of an account rep out of Clavette, excuse me, and he'll do the grain marketing update for you guys. So let's dig right into it. The timing for this field huddle is really good. This fertilizer market update. Last week we met with our suppliers, and part of our discussions there was we had our fertilizer merchant from Winnipeg in, and so he presented to us, and we were able to learn a lot from his presentation. So I did go back and borrow some of his slides, just because so many of them are so well done, and I thought that what he presented there was really interesting. So I guess when I take a look at the fertilizer market, I think what is it that makes a market? So I think we're used to talking about markets maybe when it comes to commodities like grain and some of the other things that we do, livestock, for example, or some of the other things, but we don't always think about fertilizer being a market. So I think the answer is it's a lot of factors. In any market that you're in, you need both your buyers and your sellers. We need the buyers and sellers to agree on product prices and delivery periods, and that can all depend on whether you're wholesale or retail or even farmers such as yourself. So fertilizer is all of those things. However, it doesn't necessarily trade like other commodity markets. We don't see enough volume on the fertilizer side of it to have, an open and free market like you might see with some of the other exchanges. However, we can look at fertilizer from the standpoint that it often does follow established patterns, is often seasonal in nature, and there are elements of it that can be predicted. So fertilizer products are bulky and labor intensive. I don't need to tell you guys that when you're bringing it to the farm. You know all the equipment that you need, and it's coming from the manufacturer that way to us, and we have to bring it in. A lot of times in Clavette, we got the big terminal there that comes in on rail, and we have to unload and condition it and get prepared to then blend it out and ship it back to farm where you guys do the storing. So all of that is very labor intensive. It adds to the price. It all has to be done while maintaining quality, and that affects the price as well. So if you guys all know that if you get poor quality fertilizer to the farm, that can really slow down your production. It can really affect, how you guys are able to make things work, in the heat of spring. So fertilizer has changed over the years. I think in the past we didn't use quite as much fertilizer. That's not the case anymore. As you'll see as we go through our presentation, fertilizer use throughout the world is growing. And as it grows, producers have become more and more consolidated, and it's become a global market. So lending itself to that is this picture, which I've borrowed from our merchant Matthew. I just thought it was a really interesting picture of how fertilizer flows. If you take a look at maybe one that we're more familiar with that you can kind of follow and see how that one tracks throughout the world. That lighter red line is potash. And take a look at where that potash originates from. We know most of that comes from Saskatchewan. You might see that big arrow coming out of Canada going down into the US. That's potash flows. So, and take a look at how it flows into, Eastern markets and really throughout the world. So a lot of the world's potash originates right here in Saskatchewan. And from there, it takes its pathway to the different marketplaces. So just thought that was an interesting graph. Wanted to show you that there really is a lot going on globally. So where is the demand for fertilizer coming from? So we see that fertilizer is globally traded, as we saw in that last graph, due to increased demand for food. So in order to meet the demands of growing populations, it takes more nutrients to do this. And we've seen over the course of the last few decades, more countries that weren't traditionally, first world, or maybe you'd call it like G7, G8 nations, have a larger middle class with increasing incomes. And the result then becomes an increased demand for higher quality of food. So one example that stands out that I think probably most of us know about, but don't necessarily think about, is China. China has a growing middle class and increasingly has a higher demand for protein. And with that demand for protein, we're getting some of the increased demand on the feedstock side of it. So maybe Eric will touch on that just a little bit later on this morning, but it also impacts then what we're seeing in the fertilizer markets. So here's an interesting chart. Basically, this chart shows nutrient consumption patterns. If you take a look at kind of that left-hand side of it, how much is being consumed in the millions of tons. And then on the right-hand side of it, the corresponding grain production and kind of what's been happening here over since from 1965 up until more recently 2015. So illustrates pretty clearly with the different products there, nitrogen, phosphate, and potash, how the world demand for fertilizer nutrients has been increasing. So then with the increase in demand there, countries have also been increasing the fertilizer that they use and the types of fertilizers that they import. So I just wanted to kind of throw a picture in there on the left-hand side of it because we know what's happening kind of in our own neck of the woods with fertilizer and how it flows locally, but maybe sometimes forget how much product actually flows internationally. And stuff that originates even out of Canada or product that we import, it's big business. So on this slide here, this just shows global fertilizer use. So basically in the world, we got about 186 million tons of total fertilizer that's used worldwide. The biggest buyer or user in there, probably both, would be what you see there is East Asia, which is just a reference to China, and South Asia, which is a reference to India. So you can also see there, interestingly, North America, where they slot in. So in North America, we would use out of total nitrogen and potash and phosphate, we would use roughly half of what, say, China would use, maybe even a little bit less. So then just breaking it down in those three areas, nitrogen, phosphate, and potash, what types of products are used within that. So here's the breakdown. Out of a total of about 107 million tons of nitrogen, you see about half of that is urea. And then some of those other products are the combination products. So for example, in MAP, you'd have a little bit of nitrogen with that. You got ammonia is about 4% of that. And I guess other uses there. On the phosphate side, some of the different products, MAP is probably the one we're most familiar with, but other areas of the world use a lot of DAP, which is diammonium phosphate. And combine those two of them make up roughly about half the marketplace. So let's keep moving along here. So how does that then relate to Canadian fertilizer use and consumption patterns and some of the historical trends? So we see in Canada that we've also kind of followed the lead of the world, where we're using more and more products as we go along here and as our grain production increases. To meet growing demands. So from 1965 to 2015, we've basically about 2.5 million tons of nitrogen alone. So, and the phosphate and potash correlates pretty closely with other areas of the world as well. So some of the key producers that make these products, they all have kind of their specialty, if you will. You might not recognize all of them there, but you certainly will know a couple of them based on their local presence, Nutrien and Mosaic. If you follow with me from left to right there, Ukraili and Belaruskali, those are basically Russian potash mines. And then one that's particularly interesting as they've grown over the last few years is OCP. They've made the news on the phosphate side. A lot of North American imports over the last couple of years have come from OCP, which is based out of Morocco. And then some other names that may or may not be familiar to you, Yara. Yara has had increasing footprint here in Western Canada. And then CF Industries and Eurochem have both been here for a while. So let's dig into what's happening in the markets. So sometimes in order to understand where we're at today, we have to go back in time a little bit and say, where did we come from? So on the nitrogen market, we'll start there. Basically what we've seen is NOLA is to explain that a little bit is basically New Orleans, Louisiana. That's where most of the nitrogen gets imported to and then dispersed throughout North America. We saw this past year, or this past summer anyway, that the price landed in New Orleans was basically at its second lowest point that it's been. So India, now more recently here, India has controlled the global market in the last couple of months. And I think Matthew's question here is, do they return to the markets? I guess we don't really know that. They are actually on pace to import a record amount of tons. Could be as much as 11 million. And then he's got here, last year they imported 9.68. So India is becoming a bigger and bigger player. We'll see that as they push to greater and greater independence as far as food production. So Matthew's prediction here is that India is expected to return to the markets early in the new year, and he feels this will likely push prices higher. So here in Western Canada, spring prepay offers were out just very recently, and the offers coming to us as retailers from suppliers were well over $500 a ton. So you can't really talk about nitrogen markets without talking about what we call the market spread. And basically what we're referring to is, what's the difference in the price in Western Canada versus what can be landed in New Orleans? So you might intuitively say, well, that's not that hard. You got a price in Western Canada, you back that off to New Orleans, but that is true. You can get a little bit of complexity though when you kind of start considering that what's being delivered into New Orleans is a short ton, so not a metric ton. And we also have to factor in the US dollar and what's happening there. So between those two factors and then freight rate changing, you do get market spreads changing. So the difference in price between here and there. Typically, rule of thumb is right around $100 a ton is what you would use. So you kind of take that New Orleans price that you guys see and you could add $100 a ton, and that should be roughly where it's at in Western Canada. Having said that, you can see from my presentation here that there's a few anomalies to that. So it's not perfect as the US dollar changes or as freight rate changes or demand changes, supply changes, you get some variation. So for example, a 5-year average was, he says, just under 100 tons. The total average over the lifespan was 118 tons. A 3-year average would be 92 tons, whereas in the summer of 2018, it was only $26 a ton, and the summer of 2019, it was only $54 a ton. So he's got a little calculation there that you can use to figure out how to get back to Western Canadian prices. So this is maybe just a little bit different graph that shows kind of where things are at with nitrogen over the last few weeks, and you can track it, and we do track it as a company, what the urea prices are based out of New Orleans. So you can see by those graphs, historically, it follows pretty typical patterns, the 5-week average, the 10-week average. And I guess the highlight for us today is that since about October or so, we have seen nitrogen prices on the rise. So just moving on to phosphorus. So this is one of my favorite nutrients. This past year, we had a great spring application across North America, which emptied out the phosphorus systems. Some of the other highlights include OCP, that company that we talked about, announcing production cuts that were in the marketplace, and they were not shipping anything to North America past June and July. The summer fill offer that we had in Western Canada here was amongst the lowest that we had seen in several years. So, and I know some of my farm customers were able to take advantage of that. Not everybody was, but as you'll see a little bit further on in this presentation, that doesn't mean that it's too late. So where does phosphorus come from? So the lion's share of phosphorus is mined in Morocco and Western Sahara. Of the phosphorus that we have in North America, it really only represents about 2% of the total trade flow around global phosphorus. So what that means is we're largely dependent on Morocco. How does that flow then influence our average retail price? I think you probably heard from myself and from other sales reps how the investment in phosphorus, that now is the time to do that. And I think this chart is one of them that clearly illustrates that. So over the last 3 or 4 years, we've had some unprecedented low prices. So as you can kind of see, we started dropping there in about 2016, and then we've seen some fluctuation, but basically fertilizer for the last, or phosphate fertilizer for the last 3 years, as this chart on map shows, have been at historically low levels. So why has phosphorus been at those levels? I guess we could ask. So basically what happens is, you saw that chart earlier about Morocco and Russia, I guess, to a smaller degree, and basically their production and how much of their product was being exported to other areas of the world. So there are some major phosphate producers in the US, being Mosaic and just having a mind blank, but the other one out there, Nutrien. So those two companies do have phosphate production facilities in the US and have been selling basically at a loss over the last couple of years to keep pace and not to lose market share with the historically low phosphorus prices. That situation made it back to U.S. investigators. So there was an investigation over the last couple of years, and they found, U.S. investigators found that foreign governments have been putting more money into those and subsidizing some of those phosphate producers in their country, and basically reducing their production costs. So as a result, they were able to sell at a more competitive price than some of the U.S. Suppliers were able to do. So once they did their investigation and found that that was the case, they announced that there would be a tariff that they would be applying, and the tariff would be anywhere from 21 to 73%, depending on the producer. So once that news hit the marketplace, most of the Canadian suppliers pulled their offers. And then we saw late last week, so this would be 2 weeks ago now, NOLA moving up to as much as $420 a ton, US dollars a ton for the short ton. And when you work this back then to Western Canada, we see prices that would be more in the range of $750 to $760 a ton in Canadian dollars. So if you think about that, how that related then to that retail price, So we can see that we've clearly moved off from what were historically low prices. So, and as Cargill, we're still waiting for spring offers from other suppliers. So we don't use a lot of potash in Western Canada, but we are seeing as we get soil test results back that potash is a player. It isn't always in the right amounts, especially in that 0 to 6 zone as you soil sample. Potash being one thing, but also coming along with potash is chloride, and chloride being mobile in the soil doesn't necessarily stay. So there are situations based on soil testing and those recommendations in certain crops where it can be beneficial even for us to add potash. So good to review that market. It also impacts us all personally, being from Saskatchewan and being with potash production being what it is. So we've seen larger than expected demand out of the US, and that's starting to move prices up. Nutrien announced about a week ago that they were closing their Q1, and that all orders now would be for Q2 and it'd be at increased prices. So, and we'll see that those prices will also come into effect in Canada. So what kind of offers has Cargill seen for spring? So nitrogen spring prepay offers were sent out to suppliers this last week. NH3 was offered kind of in that 725 range. UAN was kind of that 310 to 325, and urea was in that 410 to 430 range. So, you know, suppliers indicated at the end of the week that they had good uptake on NH3, but very, you know, and a little bit more so on UAN, which is just liquid 28, and then very little on urea. So at Cargill, yep.
The urea for spring, is that a misprint 410 to 430?
Well, these would be potential offers. So I don't know that suppliers are buying at those levels. So this was, remember, these are about a week out. So
right, but would it be closer to 510 and 530?
I don't know that, Brad. These would be Matthew's numbers. That, yeah, you're thinking about it. You're probably right. Yeah, because we said earlier that we were up in that 510 to 530. Yeah, we're in the plus 500. You're right.
Yeah, I wonder if he made a misprint there. Yeah.
Yeah, right. Exactly. Yeah, I would suspect so. So, you know, the thing about fertilizer too is it's not, you know, where the offer are being made isn't necessarily where the retailers are buying at, right? So retailers such as Cargill have, you know, in the neighborhood at Clavette, they're 30,000 tons. So we may be looking at a position, and if we feel like it's a good position, we may take a stab and buy some at those prices, but we might hold back. So depending what the offer is. So just because, you know, the offer is where it's at, it's a little bit like on the grain side of it, where you guys would see a price and say, well, you know, I might sell some there, but I might hold back and sell some down the road as well. So in any event, suppliers indicated at the end of the week that they had good uptake there on UAN or on NH3, but not on the other products. And we're still waiting for some offers on some of the other products like phosphate and AMS. So not to get lost in the details of the pricing, I think it's important to think about how this might affect your farm. Not everybody has purchased product yet. A lot of farmers have made that move, especially if they have the ability to store. But if you haven't made that move, it doesn't mean because the prices are higher than they were that they're not, you know, of benefit, or that it's not an economically feasible thing that you can do. So I went back in time because I like to save stuff, and I'm weird that way, especially with fertilizer. But I went and took a peek at where we hit some of the highs just for context. So I threw in our 2008 Cargill prices. I thought that might be interesting to a few of you where we were at. So back in those days, and I remember these in particular because that was the year I started with Cargill. and we saw the big run up in fertilizer prices that year. So just because prices have gone up doesn't mean that there isn't the ability to still purchase price or product at a good price, and that it's not economically feasible to do that. So one of the highlights there was MAP. I hope we never see that day again, where we were up over $1,400 a ton for it. And something like nitrogen was running $850 a ton. So thankfully these were more spring prices. We didn't see a lot of farmers needing to purchase even at those prices back then, but I think it is a call to action to say that if you haven't made your plans around fertilizer yet, given what's happened so far in the marketplace and maybe what is potentially going to happen given the commodity prices that we are also seeing, probably a good idea to do something sooner rather than later. And then just one last slide here. I guess this is the agronomist in me coming out, but it takes it to grow it, right? So by what I mean by that is we got to invest in the fertilizer in order to get the yield. So I just put these charts up here. So take a look if you were to, be able to capture a 50 bushel yield on canola. I know that hasn't maybe taken place for all of you over the last couple of years, but take a look at what the nutrient requirements are there. So, 50 bushel crop is going to pull 165 pounds of N from somewhere. So you have to figure out what sources you all have in play there. Or, the total uptake on phosphorus is around 73 pounds. Take a look at spring wheat. If you were to manage a 60 bushel yield, under the right conditions, 138 pounds of N, 48 pounds of P. So those are numbers that the crop is going to need to reach those kinds of potentials. And it's going to be whether or not your soil can supply it or whether you put it in the ground to help it supply that as well. So just in a way of summary, we saw how fertilizer is more global. Manufacturers have more and more products. They're trying to differentiate themselves in what's becoming a crowded marketplace. So some of the new ones that we've seen come on board are products like Super U and the nitrogen side, or other nitrogen stabilizers, N-Serve, those kinds of things. The phosphorus side, we've seen new entrants. More and more companies are basically making products that are tailored to the crops that you grow. So the choices are there. The economics of using fertilizer are still strong. And I think most importantly of all, we need to keep using fertilizer, keep applying it to make sure that we remain sustainable in the future. So that's all I had prepared by way of a presentation. If there's been any comments in the chat room, we can take those, or if anybody wants to ask any questions, feel free.
Yeah, does anybody have any questions for Scott? Either type it in the chat there or come off mute and then ask for sure.
Hey, Scott.
Hey.
Kelly Cola. So do you think that we're potentially sitting at a 3 or 5 year low right now then?
Yeah, my opinion would be that we've seen the market kind of hit its bottom. I think especially around phosphorus. But one of the things when I was talking with Matthew about prices going forward was he talked about increasing energy prices. So energy prices, especially in Europe, are low right now. And as the energy prices increase and the cost of producing nitrogen fertilizers increases, then we would expect to see, increasing prices on nitrogen. So we've already seen that on phosphorus. We've seen the market move up. We've seen probably potentially the prices on nitrogen moving up, and potash is also on the rise. So I think we are coming out of some of our lowest prices historically that we've had. And then you combine that also with the fact that we have We have high commodity prices as well, so.
Perfect.
So I've
Thanks.
kind
Thanks,
of
Kelly.
gone over time, so I better let some of the others present before we keep you all way longer than we planned on.
Yeah, thanks, Kelly, for that question, and thanks, Scott, for your presentation. So, yeah, I guess just for a little bit of a wrap up with fertilizer, what it tells me with Scott's presentation is you guys grow the grain and you market your grain. You kind of look at fertilizer kind of the same way as kind of you take the risk off the table at certain times of the year to lock in prices and your supply to kind of minimize your risk to get the best kind of price on grain, but you also want a good fair price on fertilizer too as well. So stay in touch with your crop input rep throughout the year and ask questions of what the markets are doing because they're always moving. So so the next presentation we have is with Amy Deering. She is a crop input rep out of Davidson. I'm just going to put on mute here. She's a crop input rep out of Davidson. She started out as an agronomist with Cargill, so that's her passion, and she's moved over into the crop input rep role. I think I'm not sure a year or two ago. So her passion is agronomy, and that's why she is doing a presentation on rotation watchouts, especially with high prices. Maybe people might want to try to push or narrow the rotation. So she's going to have a little bit of a presentation on rotation watchouts and how to manage your risk and minimize your risk. So great to have Amy with us today and present today. So here's Amy Deering.
Thank you very much, Brad. Everyone can hear me and see my presentation okay?
I can hear you and see your presentation. Thanks, Amy.
Okay, and you can see it in the presentation view, not my view?
Yeah, I see it. It's nice and big.
Okay, perfect. So yes, like Brad talked about, my name is Amy, and just so I'm not a random voice coming over your speaker today, that is a picture of my little family, I guess. Crop input rep in Davidson, like Brad had mentioned, and I've got my cell number up there on the screen. So if at any time you have any questions.
Amy,
Yeah.
only thing I see right now is the rotation watchouts slide. I don't see anything else.
I'm just not moving. Okay, and okay, let me just see here. How does that look?
It's the rotation watchouts right now.
Does that mean now?
Yeah, now it's moved. Yeah, perfect.
Okay, good. So my cell number is 444-9702. So if at any time you want to send me a text question, if you want to unmute and interrupt me, feel free to jump on in and join the discussion. So I will try make up a little bit of time, but slow me down if I'm going too fast. Outline of the, I should also mention, I should give Lalit Ives credit for her contributions to this presentation. Lalit helped me make these slides before she went on her Christmas holidays. So yeah, thank you, Lalit. So things we're going to be covering today is some good, better, and best rotation options, as well as a realistic rotation here in Saskatchewan. Some things that influence our rotation, and then 5 things to consider when either making or changing your rotation pattern. So for people listening in, I'll try to read out the slides so you can follow along, but if you're able to watch, feel free to follow along as well. So I've got listed a good rotation, and that is a rotation in year 1 of wheat, year 2 Liberty Link canola, year 3 barley, and year 4 Roundup Ready canola. I call this a good rotation because realistically this is a 2-year rotation. We're doing cereal canola. So it could use some room for improvement, but at least we're switching up our chemical families from the Liberty Link to the Roundup Ready. Our better rotation is also a 4-year rotation of barley, followed by peas or lentils, wheat, and then canola in year 4. I called this a better rotation because it mixes in that pulse family for a third host crop to break up the disease cycle, as well as our wheat crop is able to capitalize on the nitrogen boost left from the pulses. And then the best rotation is year 1 wheat, 2 pea, 3 Liberty Link canola, 4 barley, 5 lentil, and year 6 Roundup Ready or TrueFlex canola. So this mixes in 3 different crop types and 4 different chemical families. So I really do think that's a good rotation to break up pest cycles and weed issues, while also letting our canola crop utilize that nitrogen boost left from the pulses. If I had an ultimate rotation up here, I'd probably include perennials like alfalfa or a forage crop, but for the sake of this presentation, I stuck with just annual crops for today. So now we're looking at a graph that shows the seeded acres year over year in Saskatchewan, and ideally, what we would see is that these lines would be pretty flat, or that the peaks and valleys would follow more of a pattern, more of a predictable pattern. But this is a sporadic graph. We're seeing in years like 2013, there was a whole bunch of acres of wheat seeded. And then in 2016, we had a big spike in lentils. So what that tells us is people are changing up their rotations. So why would somebody want to change up their rotation? There's a few factors that influence that. The first being the cost of inputs, like Scott had touched about. Fertilizer price changes, and when fertilizer and maybe seed prices get up high, it might be a little less appealing to grow canola. And then in a year when fertilizer prices are low, it might make canola a great money making crop. The next thing that factors the rotation is the grain and the market and the movability of the crop. Obviously, you want to grow a crop that you can sell for a good price and move at a time that works for you. And the last factor impacting our rotation is the comfort level. Sometimes it's hard to try a new crop, and it's nice to stick with what you know, but I think there's benefits to having a good rotation. So next we'll cover off 5 things to consider when either making your rotation or making a decision to change your rotation. They'll include pest cycles, weeds, residual herbicides, soil considerations, and management considerations. So pests and pest cycles. Why is it important to have a rotation? I think we all know the answer is to break up these disease and insect pest cycles so that they're not able to build up large populations in your soils. Insects with low mobility, like worms and small beetles, lay their eggs where they feed. So if you had wheat on a field in 2020, there would be wireworms feeding on that wheat and laying eggs. So if you went back to that same field and seeded barley in 2021, that wireworm population would have really built and could have the potential to do significant damage to your barley crop. Flea beetles would be another pest I'd point out that can really build up in a small area over time. So having canola on canola, you're really putting yourself at risk of flea beetles. What can you do? You can rotate to a different crop family, so you break up that cycle, or you can seed treat with an insecticide if it's not an option to change your rotation. And make sure to scout often and scout early for insect damage and then act accordingly. Diseases are like small insects in that they're not always able to spread their spores a far distance. So if you had a heavy disease pressure in one year and you follow with the same crop family the next year, chances are that spore load is going to be there in your soil and it's going to do some significant damage to the following crop. So it's important not to host those not to seed those disease hosts back to back. So what can you do? Ideally, rotate to a non-host crop, but if that's not an option, there's tons of seed treatment options available, and then fungicides that can be used in season. And this could mean spraying fungicide applications multiple times throughout the year to target each different disease, For example, if you're spraying for flag leaf disease in your cereal crop, you may have to come in again and spray for fusarium head blight to target both different disease patterns. And clubroot is one disease I'll put a little asterisk on, in that we've got another management practice available in choosing resistant clubroot canola varieties, but be sure to rotate that resistance gene so you're not breaking down your protection. And then another little note I'll add is weeds can also be a host to insects and disease. So if you have a field with a maybe heavy stinkweed and wild mustard pressure, those would be hosting the same pest that will damage the canola crop. The second consideration I'll talk about is weeds. So if you have a hard to control weed problem like kochia, you may lean away from a crop with limited herbicide options like lentils and into a good cleanup crop like cereals or canola. Weed resistance, groups such as 1, 2, and 9 have known weed resistance issues, so growers may want to avoid crops that rely on those herbicide groups. And then the last weed consideration is your herbicide rotation. To prevent resistance issues, you'll want to avoid using the same herbicide groups within consecutive years. So what can we do? If we do have to tighten our rotation and our herbicide groups are getting a little close together, you can pre-burn with a tank mix partner for better weed control and resistance management. Some of my favorite pre-burn tank mixes for canola are Conquer, and then Certitude is a new one coming this year I'm a little excited about. In front of lentils, I like to use Focus as a residual product and Goldwing as a contact product. In front of peas, I've seen Authority do great work. And before cereals, DB878, Corex, Blackhawk, and there's tons of options. Our third consideration is residual herbicides. While these are great herbicides for weed control in the year that they're used, we have to remember which field they're applied to, so we're not going to be seeding a sensitive crop into that field the following year. And it's important to remember that soil conditions and environmental factors can impact how long these herbicides carry over. So a couple to watch out for would be the Arlex herbicide family before lentils, and then Odyssey has some restrictions, Everest, Infinity. So definitely keep good records of where you're spraying these residual herbicides to save yourself any troubles the following year. Our fourth thing to consider is our soil. First would be the trash and stubble. Crops with heavy trash like cereals that aren't baled can pose a problem for shallow seeded crops like canola. So in that rotation, it may be necessary to harrow between the crops. Soil health is another consideration. Different crops have different rooting patterns. So canola is more of a deep single tap root, whereas cereals are more of a widespread fibrous root. And switching up that root zone can help do a little bit of tillage and keep the soil healthy in that root zone. So that's especially important in zero till and low till production. And then the last soil consideration is the nitrogen level. So these require a soil test to know for sure, but we can usually have a pretty good idea. Crops that develop nodules to fix their own nitrogen, like peas and lentils and soybeans, perform best when they're seeded into a field with low nitrogen levels. So if that nodulating crop is seeded into a field with high nitrogen, the crop can become lazy and won't develop its own proper nodules, and then you can run into issues later on in the season. And another watch out would be malt barley. You don't want to seed that into a field with lots of residual nitrogen, as it can cause some issues with the malting quality. On the other hand, crops with a high nitrogen demand like canola could benefit being seeded into these fields with residual nitrogen, so you can capitalize on that free fertilizer. And our fifth and final thing to consider when planning your rotation is management. First being the storage. You know your vineyards best, and throwing off your rotation can impact if you have enough aeration and storage for each commodity, as well as drying needs differ by crop. So throwing off your rotation can kind of impact how much time you're spending drying each commodity. And the last management is your time management. Your time is important, and some crops take more time at different times of the year. For example, canola needs more time filling the drill at seeding, whereas pulses generally need more time in the summer spraying fungicide. So sticking to your rotation allows you to be able to predict how much time you're going to need to spend on each commodity. So with that, that's kind of all I had prepared. I would just leave you with a couple final questions to mull over. Is it worth the risk to tighten your rotation? And what are the benefits of expanding your rotation? I hope I didn't go too fast, but I hope I made up some time if there's any questions that come in.
Well, thanks, Amy. There's nothing in the chat. And if anybody else has a question on rotation for Amy, either type it in the chat or unmute yourself and ask the question.
I can go back to my phone number, put that back up on the screen. 444-9702. If anybody wants to follow up at any time. I don't know if I remembered to mention this, but I used to be an agronomist before I was a crop inputs rep, so I love chatting about rotation and all nerdy things soil, so feel free to reach out.
Awesome. Awesome. Well, thanks, Amy, for that presentation on rotations and managing the risks on that, because that's that can affect that sustainability of that farm 3 to 5 years down the road if we don't manage the rotations properly now. So appreciate that, and hopefully that was very, very well done. So next up we have Eric. He's a account rep within Cargill. He's been with Cargill, I don't know, 5 to 8 years, somewhere in there. Been in the Clavette area, working with growers as well, and helping them with grain marketing decisions and crop input decisions. He has a passionate when he talks about grain markets and helping growers make grain marketing decisions and different tools that Cargill has. So he's based out of Clavette, and some of you guys might know him. And just to respect of time, I'll introduce you to Eric and let him give you his grain market update. Thanks.
Well, thanks, Brad. Yeah, I hope everybody can see my screen here and everybody can hear me. I'll just check with you real quick, Brad.
Yeah, it says grain market update, and I can hear you just fine.
Perfect. Yeah, my name's Eric Prusesky. I've been with Cargill nearly 8 years now, primarily buying grain. I do work on the crop input side as well. Just want to maybe give a quick plug to the Market Sense group and our consulting business on the grain side. They work together pretty closely with me to help put together this slide. They've got fantastic services available. They're always willing to help manage any risk that you guys may have as well. So being that we're kind of running a little bit late, I'm going to probably just jump right into it here. And we'll just start with a couple of the reports that we've seen come out here recently. So the first one being the Stats Can report that we just saw here at the beginning of December. The biggest shock on this one would have been the canola number. I mean, the average trade estimate was coming in around 19.3 million tons of production for us this year. And we actually saw numbers from StatsCan come below even the lowest trade estimate at 18.7 million tons. Wheat kind of held in right where everybody expected. And that's wheats with both durum and non-durum wheats as well. So your spring wheats and your feed wheats. Barley again, very much right in line with what we were expecting this year, and same with peas, maybe a little bit up from the average trade estimate. So. In December, we also had WASDE report come out of the United States, and the biggest number here was that we didn't see a big change from the corn number from November to December. But the one thing that we have seen here is that as the USDA has been putting out these reports since August, we've seen that corn number drop from about 3.7 billion bushels down to about 1.7 million bushels. So a fairly significant drop in production, almost cut it in half here from what we expected, on the carryouts from what we expected back in the summer. The other one to bring a little bit of light to as well is on the soybean side. We've got about 175 million bushels of soybeans, which was down a little bit from what we saw in November at about 190 million bushels. And again, from August, we were anticipating about a 200 million bushel carryout in the U.S., which is actually quite tight. But to reduce that by 25 million bushels is about a 12% drop just from what we expected since August. So again, things are tightening up, particularly in the U.S. and as well as globally. I mean, even when you look at the world carryouts on corn, they've dropped from the November report as well as wheat and soybean. So diving into canola a little bit here, there's a couple of big things here. I mean, obviously that production number at 18.7 million tons is significantly lower than what we've seen the last 5 years, and I think everybody on their farms would probably agree with that this year. But the other note here is when we look down at the disposition and we look at the numbers for crush. I mean, we're crushing at a record pace this year with an estimate of 10.25 million tons being used there. And exports again at very, very high levels, pushing towards record paces. Particularly demand out of China is what's eating into that. That leaves us, we're looking at basically matching the crush numbers or even potentially exporting more than what we crushed this year. And that leaves us with some really, really tight ending stocks at about 4%. We haven't really seen ending stocks this low since 2012 when we went through the corn drought in the U.S. and we had canola blow into Manitoba. The winds in 2012 were the last time that we actually saw numbers this low. So this is all very bullish. It actually looks like we could potentially run out of canola here locally by the time we get to the summer. So when we talk about canola, I mean we can't avoid the elephant in the room, which is soybeans. The big thing that I wanted to highlight here with this slide is actually just the growing process in Brazil. I mean, there's been a lot of talk about the lack of moisture through Brazil and Argentina. But when we look at it right now, we're just kind of finishing up planting in southern Brazil. And so I mean, many of you guys have maybe tried soybeans in the past and are aware. But there's 2 times of the year that moisture is absolutely crucial for soybeans. And obviously one of that is right now. We need to see some moisture to get that crop established. And the next period would be in February when we get into that pod fill season. Those are 2 really, really crucial times. And that's why we tend to talk about weather so much between, call it middle of November to the end of February, as to what's happening in South America, trying to get a handle on what we're kind of expecting for production out of them. Moving along, this chart just kind of highlights how much we've actually dwindled the ending stocks of soybeans in the U.S. And again, this is primarily China. I mean, when we look back to 2018, 2019, we had heavy trade wars and the Huawei issues were just starting to kick in. And we saw China really step away from importing really anything out of the U.S. And we saw those U.S.
Eric, I think you're froze.
Did
Eric.
we lose you?
Yeah.
I'm here.
Yeah, we lost you for a little
Okay.
bit. You're back.
Let me see if I can get this thing back up again.
Okay. Oh, it's up on my end here.
All right, let's
Okay.
see if we can get her back here on mine so I can actually see. Sorry about the technical difficulties. All right. I think we're good now. Are we good,
Yeah.
Brad?
Yeah, we got
Okay.
the U.S. soybean ending stocks. Yeah.
Yeah, so I mean, we've really dwindled these down. I mean, we're at levels that we haven't seen in really the last 5 years, and really, really strong demand. I mean, couple this with some weather issues that we're seeing in Brazil and Argentina, where they're maybe not getting the moisture that they're hoping for, and they're starting to pencil in reductions in their overall production numbers for this year as well. This is again pointing to a bullish market for soybean. So again, I'll maybe just jump into wheat a little bit here. Wheat is in a little bit different spot right now. Realistically, we're okay with wheat, particularly high quality milling wheats like our hard red spring wheats that we're seeing. We are starting to see some concern, I guess, when it comes to winter wheats in both Russia and the U.S. right now. I mean, we are dealing with a little bit of a drought in both areas. Both of those crops have now gone into dormancy. So remains to be seen how they come out of dormancy and what type of moisture they get really early on as we get into the spring and actually into the growing season for these crops. The one thing to keep an eye on when it comes to wheat and global exports of wheat is there is some news starting to come out of Russia right now. Russia has been moving wheat through the export system at a very, very high pace, and it's pushed the price of Russian wheat internally very, very high. And so Russia is actually starting to talk about putting on export tariffs again, which would lower the price of wheat internally within Russia, allow them to potentially hold on to some of those stocks for feed and for food. I mean, at the same time, everybody is trying to hold on to some production right now because we are in the middle of a pandemic. And so everybody wants to be able to hold on to a bit of food. But if we do see that come through, that would take some potential exported wheat out of the market and actually could push prices higher into say the U.S. markets or the Australian markets or us as well. So again, this just kind of highlights. Yep.
There's just been a question in the chat before you go on about soybeans. I'm not sure if you have the answer, but if what did soybeans prices peak at in 2013 and 14? So I'm not sure if you have that answer or if one of our grain market analysis has that
question. I'm not sure if Gavin is on the call. He might have a better recollection of me. I want to say that they peaked in Western Canada around that 12.50, 13. But I'll maybe refer over to Gavin on that too, or if you want to step in here, Gav.
Yeah, Gavin, if you're there, or you want to put in the chat.
Yeah, this is Gavin here. Yeah, I was just looking back at a 10-year chart on soybeans, and what we were looking at is futures were in around that 16. We're back in 2012, 2013, and we had tight stocks on canola and soybeans. Our soybean futures were in around that $15, $16 a bushel, is what we're looking at there. So right now we're hitting around that $12 a bushel. So there definitely could be a lot more upside. Even looking at canola, we're just kind of breaking that $600 value back in that 2012, 2013 time slot. We were kind of pushing $590 to $650 futures. So there's still a potential that this market could continue to climb into those areas where we were once before, about 5-6 years ago.
Thanks, Gavin. Thanks for that.
Any other questions?
That's all I see in the chat for now, and we can keep on going. Thanks.
Okay. Yeah. So again, this just kind of highlights the fact that we really haven't seen a drop in ending stocks here. There isn't a lot of pressure in this market like what we're seeing with soybean right now. Wheat is staying relatively stable, and the production globally has been relatively stable. We've seen some drier patterns, particularly through Canada and the U.S. and Europe and into the Black Sea over the last couple of years. But wheat tends to perform fairly well during dry years as well, and doesn't seem to take the hit that something like canola or soybean would, and that's translating into the numbers that we're looking at today. So when we're talking about wheat or barley, or when we get into feed grains, I mean, U.S. corn is going to be the driver of the market. So the corn S&D carryout has dropped, like I said earlier, very, very significantly when we look at those ending stocks at 1.7 billion bushels. It sounds like a massive, massive number. But I mean, we were expecting about 3.7 billion bushels for ending stocks back in August before we seen China really step into the market and start to buy up a lot of U.S. corn. I mean, that China is the talking point on everything right now when it comes to demand globally, whether we're talking corn, whether we're talking wheat, canola, soybean, you name it. China is buying everything right now. And so what we're actually seeing is we're starting to see that that stocks to use ratio drop into pushing into that 10% range. So we're getting into some tighter carryouts on U.S. corn as well, and that's having an impact on some of our feed prices as well. So that'll take me into barley, and I'll maybe talk about barley here a little bit. The big highlight here on barley is the total barley export numbers. I mean, 3.1 million tons is what we're anticipating to export this year versus about 2.3 last year and 2.3 the year before and 2 million the year before that. So I mean, a very, very, very fast moving market right now. We're pushing out barley in a big way, particularly to China. Whether that be malt, whether that be feed, this stuff is flying off the shelf. We're not necessarily seeing the demand come from the domestic side like we did last year. I mean, demand on the domestic side is still strong, but we are scaling back a little bit from last year. So the big number here that I wanted to highlight was how much barley we're moving out. Where malt fits into this would be under the food and other disposition. So those numbers are fairly flat over the last 3 years. I mean, we've seen a real uptick in demand back in 2018, 2019 on malt barley, and those numbers have held in fairly flat this year, which is actually kind of surprising. I think that there's maybe some opportunity going forward for some more demand for malt barley if we can get this pandemic under control. The big driver of malt is it's not the guy going to the liquor store on the weekend and picking up a case of beer. I mean, we go through a lot of demand on malt barley through stadiums for concerts and football games and baseball games. That's where we see a lot of consumption, and right now we don't have that. So it's actually quite impressive to see these numbers hold in where they are.
Eric?
Yep.
Question in the chat here. When will Russia bring in trade restrictions on wheat? That's one question. And then the next question is, any comments on China's restrictions on barley imports from Australia? So if you start with the first one,
sure.
I guess, when will Russia bring in trade restrictions on wheat?
They could at any point, really. The anticipation would be that we'd probably see something in the new year if they were going to make a move. But I mean, with Russia, it can come out at any point in time. At the same time, I mean, Russia will put out news one way and then they'll change it 3 weeks later, and the news will come up and it'll be totally contradictory. So I mean, we do have to take it with a grain of salt, but it is kind of the smoldering fire that we're keeping an eye on right now. When it comes to Australian feed bar or Australian malt into China, or barley exports in general into China, absolutely correct. China is not dealing with Australia at all, and I think that's why we're seeing some of the export numbers that we're seeing today. Normally, what you'll tend to see is China will come to Canada for kind of that first half of the year, where we see heavy shipment kind of that September or October right through till about the end of March. We can kind of ship heavily into the winter, and then we tend to see a lot of those shipments die off. I mean, I've been buying malt for a number of years now, and the number of times I've had conversations with guys in December and January going, you know, we've got to try and get this stuff sold. We got to try and get it sold for January, February, March. Otherwise, we're kind of going to be bound to the domestic markets, and we're probably not going to see a lot of demand for elevator companies to be moving a lot of barley into the spring and in the summer months. And with we're anticipating that we're still going to be moving a lot of barley through the spring and summer months because right now China has a 73% tariff on all incoming barley out of Australia. So they are not importing anything from Australia at all, and that's turned some of that demand back to us. Great question. I was going to touch on that very shortly anyway, so I appreciate that question coming through. This slide is kind of an interesting slide. I was actually talking with Gavin about this one this morning, and I was trying to wrap my head around it a little bit as well. But what this highlights is the additional tons of barley that have been exported on a week-by-week basis from last year. So, I mean, when you look into week 1, week 2, we're talking that first couple of weeks of August, and basically flat. We didn't see any real uptick in exports in the first couple of weeks. And then as we started to move forward, I mean, you look back week 18, which would probably be a couple of weeks ago now, we're seeing nearly 750,000 tons of more barley exported from us into China. That's where it's all going, than what we had the previous year. So very strong demand from the export side, and that's why we've seen feed prices move to where they have. I mean, this year is a year where trying to buy feed grain through an elevator is actually a lot easier than it has been in previous years because the export price is actually outpacing that domestic price into Lethbridge right now. So I'll just kind of rip through pulses here really quickly, or peas here really quickly. I know we're kind of running short on time. Peas is kind of a similar story to canola, where we're sitting at a very tight carryout on it. The reality of it is we're probably not going to see major swings in acres on peas because there's only so many acres that peas can really go on to, and there's only so many acres that you guys can fit it into your rotations. But we are seeing a very tight carryout right now. I mean, we're roughly 5% there as well. Where the demand for peas is coming from, again, it's coming from China. What they're looking for is high protein feed. They went through African swine flu about two and a half years ago, and in order to control that, they went through and basically slaughtered off all of their pig herds. And now they've kind of got that disease under control, and they're really ramping up their pork production. And that's where so much of the demand for feed is coming from right now, whether it be barley, whether it be peas, and soybean as well. That's why they're just buying up everything that they can. So that's again where a lot of the demand is coming from, and that's why we've seen new crop price indications come out kind of in that $7.50 to $8 range. I mean, Cargill right now, I think, is indicating targets between 750 and 775 right now for August and September movement. And oil crop prices have kind of moved into that 925 to 950 range. The last time we were this tight would have been probably back in 2016, I want to say. I'll probably refer back to Gavin on that one again. But again, we've kind of seen those prices get into that $9 to $10 range as we kind of move through the winter for that old crop and moving towards that $8 for new crop. So again, some very attractive prices going forward. Other than that, I didn't really have a lot unless there's any more questions. Feel free to reach out to myself at any point in time. We've also got Gavin here, so I mean, if you guys got some questions, he's a fantastic advisor, and I probably even defer to him at this point.
Eric, there is one question in the chat. Where is new crop feed barley going to that grain companies are buying now?
That's all going to China as well. Where when you're looking at new crop feed barley that everybody's kind of lining up, this is not going to be truck business where we're going to, bring in a few trucks and sit on it for a week and then try and move it out to Lethbridge or direct off farm movement to Lethbridge via truck business. This will be load and rail cars in September and in October and moving this stuff out.
Cool, thanks, Eric. Anybody else have any questions for Eric, or I guess Scott or Amy before we wrap up? Either enter it in the chat or unmute yourself and ask the question away, and we'll try to answer it. Okay, sounds like everyone is good for questions. So again, I would like to thank Scott, Amy, and Eric for presenting on those topics today, because it was very helpful to you guys to make some planning decisions and on your farm. And thanks for sticking with us. Went a little bit over time, but hopefully it was worth it. And we will probably doing a few more of these information sessions in the future.